All right, I'm here with Mr. Donnie Gilbert, a fresh face that I haven't seen in a while. Donnie, what are we taking a look at today for our carrier update?
Good morning, Andrew. So we're going to start off by looking at outbound tender rejection rates, and I've turned this on a seasonality mode. What I want to look at is what's happened comparing 2021 to 2018, 2019, and 2020. As you see here on our chart here, the blue line that starts kind of to your far left there and ends, that's where we are today. That's our current date. And we're comparing to the green line, which is 2020, the orange line, which is 2019, and of course the purple line is 2018. And we've had quite a bit of differences over the last 4 years of the different freight markets. So here 2018 was a very robust market, but in 2018, right after the 4th of July, we had a big downswing where we led into that very low rate, kind of a dismal market of 2019, which we see here in orange. And then of course in 2020 we had COVID. So here right around July, we're opening back up and we see a big upsweep. So where we're kind of going to go from here right now, comparing 2020 to the previous years, well, there's a trend that you actually see in 2019, and that's here starting after the 4th of July through September here, where you see kind of a dip. Now, of course, we're not going to have rejection rates this low, but going forward right now, we're going to be up here around this 24%, and we're already starting to see the downward swings. We're going to see a kind of a dip go through the market during 2021. It's kind of a slow season. The 4th of July is the peak of the summer shipping season. So after the 4th of July, we'll see it kind of trend down a little bit. Through the rest of July, we'll see a bump at the end of the month for July, kind of maybe trend down through August as well. And we'll see a bump for the end of the month and of course the Labor Day weekend. So we're going to see quite, it's going to be quite a little bit different here. It's not going to be a repeat of 2019, but you're going to see it just from a higher number being up here since our rejection rates are so much higher. And it might be more defined because right now there's a lot more volatility in the market than there was back in 2019. So it might enable that as it kind of normalizes out for that dip to be a little bit more defined this year.
Yeah, it seems like of our 3 or 4 years of data here, 2018 is the only good barometer that we can use as to give any sort of insight into what we have right now. But what's giving you confidence? Are you seeing that you think demand is going to wane a little bit here after into the Q3 into Q4, eventually picking up in the fourth quarter, but you're expecting demand to wane a little bit? Are you seeing capacity being added to the market? Or
I think demand's going to stay strong as it has. It's just that we're kind of getting that area where things kind of start to slow down a little bit, and it's going to give shippers a little bit more momentum to push those rates down. And that happens, after the 4th of July through around September, into September, before that fourth quarter rush starts to pick up. Gotcha. So that's what we're going to see. So demand's going to stay high. You'll see rates go down just a little bit. And looking at our next chart here, we can kind of see what's going on already. Looking at dry van is here in blue, and yellow we have the reefer outbound tender rejection rates. And you see after the peak holiday here, they're already starting to trend down. And of course, again, we're coming off into the month, into the quarter, 4th of July holiday. So these will, trend down here for a little while. But, we have dry van rejection rates at 25.40 and reefer at 33.15%. And of course, reefer has actually been trending down for quite some time now. It's more of a niche market, but those rejection rates got up over 40% for an average and stayed up there for quite some time. So it's time for them to start, trending back down. Shippers have really been struggling with reefer capacity, but it's more of a niche market. But let's look over at a map here and let's see where where's capacity tight. I'm going to start out with dry van, and we're looking at our head haul map here, or head haul index. This is the dry van, so this is V haul. And you see here, of course, through the Midwest and through the Southeast, we're looking for the blue markets. The blue markets have more outbound freight than inbound trucks for tendered loads. So the red markets have more inbound trucks than outbound freight. So we want to kind of, we say run to the blue, run to the blue. And you can see it here now. There's a lot more states in the Southeast that have blue, even after the holiday, and mainly here in the Midwest. So these are the two best regions to run right now, would be the Midwest and Southeast. Now, of course, you look out on the West Coast, and your other really strong market is Los Angeles and Ontario. So these are the areas that, if you're a carrier, these are the markets that you want to run your trucks to. Dallas is strong. Houston's still a pretty good market too, and you see a little bit of blue there. Now, comparing this map here, go ahead.
I was just going to say, Zach Strickland often uses the new capacity trend data that we have, which takes into account head haul and also outbound tender reject index. And you see a very similar picture being painted here. Southeast, really difficult capacity markets. Out west, been difficult for a long time. But it's a very similar map here, right? You're seeing a lot of freight coming out of Southeast and
the capacity trend information is great data just because it takes a lot of the guesswork out of looking at this data. And so that's a new index that we have, and everybody should be looking at it. But if you look at this map right here, this is dry van. Let's swap over here and look at reefer, and it's completely different.
Wow.
Here you have a lot more red, especially down further south. Produce season's moving more up into the Carolinas and North Carolina, and they're still red there as you have more inbound trucks. Indianapolis has been a strong reefer market for quite some time, and really a lot of the blues are out more, on the West Coast, and normally right through here from kind of this Arkansas moving up through Nebraska and Iowa. I call that our poultry belt. A lot of chicken, a lot of turkey through there that's available, and this is one of the strongest areas right here. So it's kind of a little bit different than what your dry van markets are. So they need to keep and really kind of break this information down to see where they need to send their trucks, because Indianapolis, while it might be bright blue here for reefer, Indianapolis for dry van is bright red.
Right, completely two different markets here for van and reefer. We got the coast very tight for van, and we've got the middle of the country pretty tight for reefer.
Yeah, and that's why it's always great to break this data down.
Definitely so. All right, thank you, Donnie.